G'day traders, Stacey Burke from Stacey Burke Trading, and today we're going to be going over quarter vibration levels for your intraday trading. Just going to highlight some simple levels that can be established. This does require a bit more in-depth analysis, but for the purpose of today's video, we're going to go strictly over quarter levels. Occasionally eighths and thirds become relevant, but I'm just going to show you how I break down the intraday levels for trading based off the previous day's price action. Just starting off with the British pound, I mainly, because I primarily focus on the Europe-London Open, I tend to look at the British pairs closely, looking for an opening break when the London session comes online. So just looking at the British pound, you'll notice I use the Fibonacci tool from the top of the toolbar, and all I've done is substitute on the Fibonacci my own quarterly price levels. So if I was to open this up, you'll see that I have 50%, 100, 0.75, 0.25, negative 1 quarter, positive 1 quarter, 1 and 1 quarter, sorry, and positive 1 and a half. And again, you know, this, if you want to read more about price vibration, Bill McLaren, the McLaren report, he has some excellent information on it. Obviously, Gambit McLaren has simplified a lot of this material. Eighths, thirds, and quarters definitely are relevant. And you'll notice I've just dragged the low to the high from the previous month on the British pound. And the reason why I've gone from low to high, the market did close up, so I tend, when the market closes up, I'll start at the low and go to the high. And with that, I use that for my end of day as well. And today, though, we're mainly going to be looking at the intraday market. So what I'll tend to do is go to my 1 hour chart from there. And this 1 hour chart, again, you'll notice on my 1 hour, I've got the Asia, London, and US markets highlighted by pink, yellow, and green. For now, we'll just disregard that. But what I tend to do now is I'll go to yesterday's 1 hour chart and do the same thing. So I'll look at that. We've got a major level around that 75, and sorry, I'll just reverse this. The market sort of range bound, but we'll go from low to high. So in this particular situation, we've got obviously significant price level with both 75% levels for the last month, as well as yesterday's hour, significant around that 4,500 area. But what I'll tend to do from there now is we'll go to our 5-minute chart. So if we were to scrunch that up, we've got our Asian session. Yesterday we saw these price levels vibrate and come off, and yesterday obviously the market traded somewhere around that 3/8 range, which was between 50% and 1 quarter. But if we were to go back and just review yesterday's trade, we'll look at yesterday's market. And again, the market was sort of range bound, so we won't really worry so much about which is the low and which is the high. It's more so giving us the levels. So if we were to go back and look at yesterday's market, we see that out of Asia, the market broke out on the London Open. It found support around that 44.18 level. We'll open this up a bit more. Sorry. And it proceeded to auction long. Obviously, next obvious high would be the Asian high, but it broke through that 50% level, found support into the US session, auctioned right up to test the previous day's high, auctioned back down to the 50% level, broke above it, retested, and didn't even give the market a chance to find support at 3/4, but then proceeded to the 1.5 extension, which it obviously at this point failed at 1 3/8, which is again 1 1/4 to 1 3/8 is usually the area where most false breaks or marginal new highs or lows will occur. So this is something that you can experiment with. Again, if we go back to that daily, even if we eliminated our daily chart off of there, we go back to the 1 hour, just to review. We look at the previous day's high and low. Put our 5-minute chart back up there just to give that a bit more clarity. So again, we're just looking for those quarter levels to potentially find support and resistance. Asia was obviously 1/8 extension either side of that 50% level from the previous day's range. The market found resistance on the London Open, retested that quarter level. Again, the market auctioned back up. As soon as the market starts to proceed long and doesn't fail at that level, you know the next logical place for it to retest is the next quarter level or the Asian high, which we saw that retest and vibrate up. Don't take my word for it. Put this on your own charts. I will say this about the British pound. It tends to show some 1/8 price activity a bit more than some of the other pairs. But again, the major price reversals and support and resistance often will reflect off these quarter levels. Again, for more in-depth explanation, you can check out Bill McLaren's work. I'll include the link below this video. I'm simplifying that today. And again, I'm talking mainly about price and time. So looking at the major sessions for that order flow, looking for potential areas of support and resistance, combine that with your price action support and resistance, and look for those areas where you're seeing some overlap to be potentially support and resistance in areas for low risk trade entries. So if we were to review the pound yen, I want to show a couple things on that today. We'll go to our 1 hour chart. So the previous day's low and high, and we'll just have a look at what happened first of all on that 1 hour chart. Now at 10 o'clock there was an announcement at 4:30 a.m. New York Eastern Standard Time, which if we take a look, that's this pin bar trade here yesterday. This gave traders an absolutely perfect low risk trade setup in line with that original trade entry, a breakout off the Asia broke out long. First 2 hours of the London session, the market formed a pin bar going into the announcement, and as we know, a large majority of the time, a high or low for buying or selling is often established in that first 2 to 3 hours of London between 2 a.m. and 5 a.m. New York time. The next obvious place was the previous day's high, and this was an inside bar from the previous day. Just double check that on the charts. Bring this back up. Sorry, yes it was. We had an inside day. Sorry, no, it wasn't an inside day. But we had a 2-day break and a 1 bar pullback. And the market, once it trapped traders short and started to auction back up into that London Open, this gave traders an opportunity to see where the obvious stops were placed. And again, just looking at, once there's traders trapped, the next, if these bearish traders were trapped, breakout traders short or trapped, it's obvious that their stop is placed above the high of that bear bar. In most cases, the market was going to proceed to auction north again to seek liquidity. Just put this back up on our 1 hour. So if we come back to the previous day's levels, we go from our high to our low. You can see that pin bar gave traders a beautiful opportunity now, and if we were to go to our 5-minute charts, looking at that entry, we know at the 10:30, the 10 o'clock closing candle, 10:55 candle. So once that market opened up, we had another pin bar on the 5-minute chart here for traders if they wanted to go long. but anywhere in this vicinity to go long gave traders the opportunity to get back to retesting yesterday's high, which was up around that, the previous day's high at the 100 level. But we, as I said earlier on the British pound, and again, a large majority of the cases, most marginal new highs or lows that fail show up in that quarter extension to 1 3/8 extension area. We saw the market reverse and then auction back down into the US Open, but this gave traders an excellent opportunity for 80 to 90 pips and 100 depending on where you got in there. So it was a very low heat risk reward trade entry. Very simple. And again, if we were to go back and just look at these quarter levels, just take a look at the price action, we saw the market test, bounce, go through, test that quarter level again, auction in that eighth either side, and then retest the quarter, and then come back and do the same thing. So as I said, don't take my word for it. Again, I just use the Fibonacci tool, and I've changed that to quarter levels. I like it on end of day as well from the previous month's highs and lows, especially going into your Monday, Tuesday opening range. If you haven't done so, check out the other videos on opening range, initial balance breakouts. But this is some excellent, simple knowledge to combine with your price action and the time of day for the opens of the Asian, US, and London markets. And traders, this is just another tool in your toolbox. Test it out. Know your own risk reward strategies. As always, manage the downside. The upside will take care of itself. Stay disciplined, and may the markets go with you. Hope you got some value from today's video, traders. If you like it, share it on Facebook, and I'll try and get a little bit more in depth regarding some of this material. But as I said, you can really get a bit more specialty following Bill McLaren report. Get his book. Quarter levels, really simple. Keep it simple. As you can see, this may have some significant impact for you, and hope it helps. Have a great day, traders.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.